Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day schedule events for Thursday, April 21st. Well, the European day starts off with UK retail sales. Now, following yesterday's worse than expected UK labour market data, it'll take a significant positive surprise to improve sentiment towards the pound, in my opinion. Now, the data doesn't suggest that. On the contrary, the volume of retail sales, excluding gasoline, is expected to be lower. This is likely to be negative for the pound, in my view. Then comes the big event of the week, the ECB meeting. ECB meetings are frequently the most volatile day of the month, but this time is likely to be an exception. The ECB launched a raft of new measures in March, but left the details of several unclear and said that they would fill in the blanks in April. So this meeting will probably be devoted to that kind of operational matter rather than any changes in policy. Questions about lending money to banks and buying corporate bonds, while important for bankers and participants in those markets, don't make for market-moving headlines. I'd expect ECB President Draghi to get some questions about whether the ECB can cut rates further, and I'd expect him to reply yes, they can in theory, but no, they don't expect that they'll have to. He may emphasize that there's still more that they can do if necessary, but that they expect that what they've done already will be adequate. Now, this week's EU banking survey, which showed that banks are indeed relaxing their lending standards, will provide evidence for that claim. At the extreme, Draghi may get some questions about helicopter money, the colloquial term for the central bank creative money, and just dropping it free to the economy. That would be about the most extreme policy that they could undertake. If he does discuss that issue, his view would be a measure of just how far the ECB is willing to go in defeating deflation. There are 3 U.S. economic indicators coming out at the same time today: the Philadelphia Fed Index, the Chicago Fed National Activity Index, and the weekly jobless claims data. Of these, the Philly Fed Index is probably the most important one. The market response to the Chicago Fed Index is inconsistent. That is, sometimes Eurodollar moves up when it misses, but sometimes it moves down too. That indicates that the market is moving according to something else going on at that time, not the Chicago Fed Index. In March, all the major Fed regional indices moved higher, but today's Philly Fed Index for April is expected to move lower, perhaps just owing to mean reversion. That could be disappointing and cause the dollar to weaken a bit. Having said that, the Empire State Index for April surprised to the upside, so this index might surprise on the upside too. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.